Alright, we are live. Let's start with the fundamental breakdown first, and then I'll hand it over to you for the technical part.
Sounds good.
Alright, let's start off with some macro fundamentals, macroeconomics, and geopolitics. So, we got an update that Russia still aims for occupation, and the NATO allies are going to be meeting in Brussels to coordinate a new round of sanctions. And as we continue down, we see that Biden administration is also going to be sending another $100 million in military equipment to Ukraine, which includes the anti-tank missiles as well. As you continue down in this article, you're going to see some of the key developments here by the timing. So you got the social bond market to help refugees displaced by Russia's war. Ukraine says invasion hits energy production sites. Hungary tells EU leaders must back moves on oil, gas. So you're going to continue to see some of these updates, but overall the sentiment that you continue to get from every single update here is that there's still market fear, the war is still going on, and Putin in no form is looking to back down, which pretty much supports that discussion that we had back and forth with the the NATO allies, where some of them said there's no point of talking to Putin because there's going to be no sort of peace deal. This kind of just supports that. So the movements and the action still being taken as Russia is continuing to aim for occupation, still killing civilians, still attacking some of these energy sites, just goes and feeds right into that sentiment. And then today, we're going to have the Fed minutes coming out. We're going to be taking a look at, this is pretty much a summary of whatever happened with the latest meeting, but this is going to give you some more details, and that's why the market tends to react a little heavy to this, right? Yeah, it's a summary. We already know what kind of happened. We know what to expect, but this gives you further details, and it's going to be talking about how much the Fed is going to be shrinking its balance sheet. So they're going to be releasing any of the assets that they've purchased. So now we know as we move into these interest rate hikes and the sentiment that's being put out, obviously we need to pull back the money that we've already put into the economy, right? So all that quantitative easing and everything that we went through in the last almost 2 years, you need to pull that money back and kind of get rid of those assets. So this is why the market tends to react heavily to this as well. And that's pretty much what the big news is going to be from economic data perspective. That's the big news that the market is going to be reacting to today. So it's going to come out today around 11 a.m. PST, which is 2 p.m. on the East Coast. And it's going to show us how fast a reduction can we expect. Now, it's the same thing here with the interest rates as it is with the Bank of England, right? Where you can't continue to increase the interest rates, but you have to do it at a pace where the consumers are still comfortable with it. The moment the consumers become uncomfortable with your interest rate hikes because it no longer supports your economic conditions, you will see investors also showing some sort of market fear into it. So right now, we're only increasing about a quarter basis point. The moment we start tapping into some faster hikes and more aggressive monetary policies and actions, you will see the consumers kind of getting uncomfortable with it and the investors getting uncomfortable with it because that move no longer supports the economic conditions, and the markets will reflect that. So that's something that we want to watch out for as we continue to see some of these interest rate hikes in the coming months as the sentiment is being put out there. There's a very high chance that you could only maintain the interest rates as well. So right now we're sitting around 0.5. There's a very high chance that maybe we sit around 0.5 instead of seeing another hike to around 0.75, which is where Bank of England is at right now. If you increase the interest rates too fast and you see that fear settling into the market, the central bank will have to cut back its interest rates. So it's better to just maintain it until your economic conditions match your actions, and they match the fact that you can continue to increase those interest rates, and then later on increase those interest rates, even going into next year, if that's what it takes. And then going on to the economic calendar side, so started off quite easy this week. Not much was coming out until yesterday. You had the services PMI. So this, I've only seen gold kind of react heavy to this compared to any other pair, like GJ for example is what we trade. So we saw gold trying to do a breakout as it was getting closer to the news release, and then as soon as the news did release, we saw it come right back down into consolidation. Other than that, I didn't see a lot of other pairs react too heavily this week. Since it is a light economic data week, a lot of these moves are going to be based off of technical analysis, technical setups, and then there's only going to be like quick little pockets of volume when the market opens up, or for example when some of these red folder news is going to be coming out. So today, for example, I'm not expecting a lot of high movements when it comes on the technical side or even at the market open, but I'm expecting quick scalp opportunities, nothing like a scalp to swing, which is what I usually look for. But around 11 a.m. PST, which is 2 p.m., we have the FOMC meeting minutes, so that could be another nice opportunity for a scalp as the market does react to how fast the Fed is going to be shrinking their balance sheet. And it also gives you an outlook on what to expect for the next couple of months and whether or not we're going to be increasing those interest rates, and are the market and the economic conditions there to support those interest rate hikes. After that, there's quite an easy rest of the New York session and even Asian session, not much coming out in pre-London either. Then you go into a London session tomorrow. You have some good Euro news coming out if you're trading any pair with the Euro currency in it. And then we have the FOMC members speaking along with the unemployment claims coming out around New York Open and the New York Stock Exchange Open. So I do expect the market to move a little bit around that time just because of the FOMC member and the Treasury Secretary speaking. This is going to give you an outlook once again on what's pretty much happening and what are the different opinions are being put out when it comes to economic conditions, and can we continue to increase the interest rates. So this is good to kind of understand that aspect. A lot of the FOMC members are going to have differing opinions, and so that will let you know how confident are we as a central bank to continue increasing. If there's a lot of discussions going back and forth, that clearly tells you that we're not that confident. There's a lot of people who are going to be opposing the view, and then if you maintain the same exact view, then that tells you that, hey, we're sitting at a pretty good level, and it seems like we're all in agreement and we can continue to increase these interest rates and pull back the money that we have been putting into the economy for the past 2 years. And then after that, Friday, you pretty much end off easy. There's nothing coming out besides the wholesale inventories, unless you're trading the Canadian dollar, but that's about it. Alright, so now I'm going to go ahead and pass it over to Stefanos.
Sounds good. All right, guys. Hope everyone's doing great. Always a pleasure to hop on here with you guys on Wednesdays. Hopping into the technicals, and just to piggyback off of what Sharma was saying, just a very light week as far as economics go. And also, nothing much has changed since our breakdown on Monday, if any of you guys have watched that. So we're going to start over here with the weekly. And I'm actually going to move this over here just because it's a distraction. Looking at the weekly now on GJ. Obviously, we have this huge move up all the way into that 64, 65 region, but we ended up rejecting that area and closing like a bearish doji over here. This candle, if you want to call that a bottom wick, as economics go, we kind of came down a little bit and just continue right back up. But it really looks like we have no bottom wick, and we're just like pushing up to possibly fill some of these wicks up here.
Okay, fine.
What's up? Everyone good?
Yep, go for it.
All right, cool. So we ended up, we're just obviously pushing up from somewhere in this region over here and holding that support. So let's go over to the daily and see what we're doing over here. Daily has actually just come right back down after correcting part of this move up. After correcting part of this move up and coming right back down into this area, we've been holding support right here around 159.800, somewhere in that area right over here, and just pushing up, creating higher highs and higher lows, healthy bullish candles all the way back up to this area over here. And that's what we said on Monday. what would probably happen after we got this solid close over here, right? We've just been creating these bottom wicks, flipping bullish, passing the highs of the previous and filling those wicks. Same thing here, never passing the lows. It's just a healthy move all the way up, right? So now we have this area right here on the weekly, which we're probably going to end up adjusting. But right now, you're tapping into the weekly highs of this previous resistance over here, candle body closes. Looking at the 4-hour now, 4-hour now, that's why you're getting that rejection. You're somewhere in this area over here, resistance right over here to the left. This candle ended up passing the high of that one right away, right? And now we're flipping bearish on the 4-hour. So far, we are holding a support right over here, which was a previous resistance, and then ended up becoming a quick support over here where we kept rejecting that area before pushing through. Now we're holding that as a support, right? And we're slowly working our way up. Again, higher highs, higher lows over here so far in the 4-hour and healthy candles, but now we're tapping into that area. From 164, 300 to 400, I would say 400 right over here. From that area all the way up to 164, you got such a clean move over here. So that's what you're going to want to wait for, is a nice close above that area for any kind of long-term buys or long-term swing trades. Looking at the 1-hour. Looking at the 1-hour, we ended up breaking through this resistance right over here yesterday, right? Nice trade coming up all the way over here. We come right back down to retest that area, and we come right back up to retest that high. Then we start consolidating in that area and holding a support and also holding this resistance over here. We kept rejecting this area right here to the left. Then if you look to the left, you got previous rejections of that area as well, if you take a look at these wicks. All right? So now, you got sort of a clean move above this area, right? Right in here, all the way back up to 162, 200. I would say, I actually want to like adjust this right here up into this level, 162, 400, right? So are we coming down? Are we going to end up holding support right over here, right? Kind of look like what we did right here to then continue up and retest the highs. Let's see how long this or big this range is. Get about 40 pips, right? So that's big enough to possibly, if you get a nice 30-minute close in this area, that'll be a nice area for us to take buys right back up to that high up here. Let me see. Let's say the candle closes right here. You got about 18 pips to retest the high up here. So that should be solid enough for you to at least grab 8 to 10 pips out of that. Looking at the 30-minute, now it's getting a little messier, right? We ended up trying to hold above this resistance right here, hold that support, pushing up. We were talking in our group earlier this morning in the London channel that we could possibly be continuing up, but we didn't like how price right here passed the high of that candle right away. And that's an indication that price is going to start reversing and it's going to stall out in that area. So now we ended up having this 30-minute support. Price kept rejecting this area multiple times for a couple hours here, and now we're breaking right back through it. So right now, I actually want to just adjust that and move that out of here. Are we going to come into any of these areas and maybe hold a support? I want to see if we have any valid trends, but I'm not going to draw any trend lines. We don't have to. Right now, we're kind of in this messy range over here. I want to see if we hold a healthy support, and maybe you want to stay on the 1-hour to see if we end up holding a support somewhere in this area over here to then continue up. So you know what? We're actually going to stay on the 1-hour, and we're going to keep our resistance right there and see if we end up holding a support here, and then we'll go from there. Do you have anything to add, Sharma?
No, it's just that on the 30-minute time frame, that was that nice little break and retest. But again, same thing. I'm waiting for price to continue pushing down. So I want to see this 30-minute candle breaking below this blue zone that you have, and then the next one continuing down.
So you're looking for sales here.
Yeah, so which is going to set up nice because it'll be the 30 minutes before the market opens up.
Okay, cool. So you're looking for that rejection of 162, 400, anywhere in this level, from 300 to 400 right over here. And you're looking to capitalize on those sells.
Yeah, so we've already gotten that top wick rejection there, and then price is kind of pushing down.
Mm-hmm.
So from here on the 30-minute time frame, I just want to see the candle closing below this area and then pushing, and then continuing down and kind of ride that wave out with the market open volume.
Okay, cool. I like it. See, for me, I don't know if I would take sells unless we break 161. I could see this move happening, like us, like tanking. I see what you're saying. I feel like I wouldn't want to take any sells, like safe sells, are
Mm-hmm.
going to be below 161, 400, coming right back down into this region.
Yeah,
And
though that's a much bigger range to catch the trade in. So for this trade to work out, what I'm looking at is just taking partials here,
yep.
right around this area. This is around like 20 pips, depending on your entry. And then letting runners go from that point and then continue pushing down. Maybe it'll retest and then continue pushing down. But like I said, I'm not looking for a scalp turned into a swing or a day trade or anything. It's just going to be a quick scalp. So for that reason, like I'm just looking for that 20 pip move to continue pushing.
Yeah, I like it. Makes sense. Let's actually see it on the 15-minute. There's one in the chat. Doesn't the daily candle being bullish not concern you?
No,
Yeah.
because this is a quick 20 pip scalp, right? So again, if I'm looking for a scalp turned into a day trade or a swing trade, then yeah, I want to go with what the daily time frame, 4 hour, 1 hour, and all of that is telling me. But right now, looking based off the 4 hour, 1 hour, 30 minute, it's bearish, right? We've just rejected, instead of 400, I have 162, 300 marked off as a zone. So I saw a rejection there, price is pushing down. Now what I want to see is price breaking below some of these zones, breaking its own lows, so then we can come back and target this 20 pip zone.
Would you wait for the retest here, or you're just waiting for a candle close below?
I'm waiting for a candle close below, and then I want to see some sort of a top wick rejection or the previous lows being broken.
Okay, cool. Yeah, let's monitor that.
And then if
Uh,
there's buys, then I'm looking above 162, 300.
I'm actually gonna place an alert right below this wick right over here.
Cool.
We get that while we're breaking down gold. All right. So let's take a look at gold now. Everybody clear on GJ?
Yeah.
In my bias, it's getting a little messy. I could see the exhaustion, and I could see us coming right back down
Mm-hmm.
into this area. I don't think I'm gonna take that sell over there. I think safer sells, maybe even below. If we start breaking below this area, I could see us definitely coming back down to 161, 500, right? And mirroring some of these moves right back down to this previous resistance over here. So we'll see what we get. Buys, I think you'll get safe buys above 164 or 162, 400, because looking at this area over here, you got a lot of rejections in this area. And then once you get above that level, you could come back up to target this level at 600. And then after that, you got some clear running right back up to 164 flat. Clean moves.
If you guys have questions on YouTube as well, just feel free to put into the chat and we'll be more than happy to answer.
Yeah, please. Take it back. All right, looking at gold. Taking a look at the weekly again. Quick update from the Monday breakdown. The previous weekly candle, if you guys remember, it looked like we were coming down to form a bottom wick over here to then eventually start flipping bullish, passing the high of that candle right there and continuing up to retest the highs and possibly continue up if we had further fear in the market. But this candle ended up just continuing down, breaking the low of this candle right there, and then breaking 1910, but then ended up rejecting and then ranging in this market for a couple of days until we finally closed right here. This current weekly candle, we're halfway through the week, and if you guys know like the anatomy of candles, the first half of the candle is creating that bottom or top wick. So in this case, we could be creating that top wick in the beginning of the week on a Wednesday, coming down, flipping bearish, and then coming down to fill this wick right over here. Especially with the sentiment, we got FOMC meeting minutes today. We'll see if they're going to announce that they're going to increase rates by 50 basis points or further that sentiment and make people more confident that they're going to be doing that.
Mm-hmm.
Looking at the daily here, daily's just ranging, right? We've been breaking down this level right here, 160, 1945. Always get the two pairs mixed up. That resistance right there has been holding a resistance. You get the fake out, price breaks back into the range. We break through 1910, end up rejecting it over here. Now we come right back up to 1945 again, hold the resistance, tap it one more time, close bearish. This candle creates a lower high, flipping bearish over here, breaking below these wicks. But we have a very strong level, not only 1910, but like 1917 in this whole area right over here that you want to pay attention to. And right now we're starting to approach that again. Looking at the 4 hour. 4 hour is now creating and respecting this bearish trend over here. Right? Lower highs right here, lower high, and now a lower high again, tapping into that area, holding this area as a resistance right here. Right? And now we have this support that we've been talking about all week, where every single time we tap into this area, starting with over here, holding the support, faking it out, closing right back above it, and continuing up to 1945. Next time we tap into that area, we tap into 1945 again. We fake it out again, we fake out 1910, close above that area, hold support, and we slowly continue our way to 1945. Same thing over here. Tap into this area and continue right back up to this area and tapping it one last time. Now we're in this area, and now we're starting to reject, creating these lower highs over here, which is just now a big range, right? Just how I was breaking down how we were bouncing off these levels over here. We're also creating these lower highs. So now that tells you it's a huge range. Everything's 50-50, so you never know. You need price to break below 1910 over here to bring us right back below and have some clean moves to the left right over here that you guys can mirror, and a clean range over here as well that you could take, about 130 pips. Right? And then below that, it's a little messy in there, but you do have this clean move over here that you can mirror, even though this is all messy. But once you actually, I would actually move this right over here, because you got this wick right over here, and then this support over here. Once you break that, you could get some hesitation around like 1880, this previous resistance, but below that, you got a clean move right over here. All right? Beautiful move right there that you could be mirroring if we do break 1889. Right? So looking more at current price action.
Before we move on to a lower time frame, real quick, just to add, if I may,
Yeah.
can you extend that zone that you just made to the left, this one right here? Yeah, so what I want to point out, so this is, it comes down to the details if you want to start paying attention to the price action details and what are some moves. So majority of the time, like we repeat all the time, don't trade in consolidation. And the reason why we say that is because a lot of people don't understand the limitations of their trade, right? So it's best to just kind of wait for those cleaner moves once price does break out of consolidation. So here, I agree with Stefanos 100% that don't trade when you're in this area. But once we start, when you narrow in into your price action, then we start to realize that every time price does react off of this level, so this lower high that price made here, every time price is in a downtrend and it reacts off of that level, it at the very minimum comes and rejects into this 1910 area, which we know from higher time frames and for the past like God knows how many months we've been talking about 1900 area as being a liquidity level, right? So you can look for those potential scalp opportunities as price breaks below this 1916, and obviously for that you would drop down to the 30-minute time frame, 15-minute time frame, and you would look for your confirmations for trades down there. So you would just come back and you would study every time there's been a rejection here, how do you catch the same exact move as price is pushing down. This is simply a quick scalp opportunity, so that is still something that you can catch, but understand that once price taps into 1910, you should be looking for some sort of partials and moving to completely risk-free Instead of break even, maybe you trail your stop loss or something like that. And then you can let everything else run as price breaks below 1910, and then you can look for a safer scale in. So there are some opportunities within this range if you really start to narrow in into your price action and study what price has done there previously. But again, if you're someone, be real with yourself. If you're someone who hasn't learned the limitations of their trade, then that's not something that you want to be taking. But for those of you who do want to test this out, whether it's a paper trade or 1% trade or anything like that, there are certain opportunities when you start to narrow in into your price action.
I like it. I actually want to hop back over to GJ real quick so you guys can see what's actually going on. Um, Going back to the weekly, no, not the weekly, the daily over here. Your sells actually do make sense, being that we're tapping into these candle body highs over here. Even though we are very bullish over here, you got to expect some kind of reaction to these candle body highs up here. Still, like, you want to wait for safe sells and you want to be smart about it. As far as like your rules, like this is Sharma's rules, like what she's looking at over here, and she's abiding by them. But I could definitely see after this 30-minute candle close over here, closing below this previous support over here, we could very well, if we pass the low of that candle or close below this area, we should be, we should be continuing down, maybe back into this 50 EMA over here and revisit that level.
Yeah, and then start it off as a quick scalp, and then that's when you have to continue to analyze your trades. So you're never really done analyzing your trades, even if you enter it. So even here, you have to analyze, okay, well, initially, this is what my thought process is legit. If I can take this 20 pip scalp here, right, then I'm going to analyze, well, what's the potential of this trade running for something longer? And you don't want to look at the markets and kind of find what you're looking for. You want to look at it and analyze it in its purest form and what is it telling you, right? So there's a difference between the two. I'm not looking for what I want to look for. I'm looking for what the market's already telling me. If I'm tapping into this 161,750 area and I see wick rejections, I see candles closing above that, I see that we're having a hard time breaking below that area, then that means I need to close out my trade, wait for retracements, and then look for better volume as price continues down for any sort of scaling opportunity. But if I see that we have an easy time closing below that area, that's when I decide to let the runners go. And then same thing below that 161,500 or 450 area. I need to wait and see how price reacts into those areas. And then even for this trade opportunity, the new 30-minute candle just started forming. I want to see candles breaking and closing below that, and that's the only way I can take an entry.
Perfect. Where would your stop loss be on something like this?
So as price continues down, let's say we get a 15-minute candle close here and price pushes down. Maybe we close into this area. I want to see the next candle make a top wick and then continue pushing down. As that happens, I would keep my stop loss right around this area here. So I'm going to give price enough room to continue fluctuating in this area if it wanted to, and create some top wicks and just retest its own highs and then continue pushing down. But if it were to break its own high and flip the other direction, then I'm out of the trade.
Yeah, I feel like if I were to take this, I would be doing the same exact thing, like waiting for that close below a top wick projection. I would just probably have my stop loss above whatever this wick ends up forming to be. So far we're getting that support formed, but we'll see. Looking back at gold over here, again, like if you guys are just starting out as traders and you're not comfortable taking anything in here, I wouldn't. I personally probably aren't either. It's just a huge mess in this whole area over here. So there's certain trades that you could be taking in some of these areas, like maybe after this candle closes with a wick to fill, take it as this candle creates its bottom wick, flips bullish, and continues up to fill that wick. And you're banking on the fact that we're bouncing off this level and creating a higher low over here and tapping into 1945 again, right? But like, and also this move right over here, right? But other than that, a lot of this stuff is very messy. Looking at the 1 hour now, 1 hour, you kind of got like, if you're creating these lower highs over here, you kind of got like a little fake out over here. After this consolidation, we come up, grab liquidity, close a strong bearish candle, get the top wick formed past the low of that candle. Now we're tapping into this area over here, but you got a lot of rejections over here. So are we going to hold support in this area, or are you going to get a close below where then you can maybe take something back down to 1910 with some fairly clean candles to the left? 30-minute. I would honestly just stay out of this range. Right? And I was going over it yesterday on the stream. There's certain weeks where or honestly a span of 2 or 3 weeks where I'll completely stay out of gold and I'll only be trading GJ. And the same vice versa, where I'll completely stay out of GJ for 2 or 3 weeks and I'll only trade gold. Right? It's very rare that both pairs are doing the same thing, where both are just really ranging and you barely get any trades that week. But there are weeks like this week with the economic calendar looking the way it is that you're not going to get as many trades as you normally do. Maybe if you're used to getting 8 to 10 trades a week, now you're really getting like 4 or 5, right? And that's okay. You're not going to have as much action. If you need your fix, go back test. But I would really probably just stay out of this whole area right here and wait for the break below.
Very often we talk about how it's normal to not have trades, how it's normal to have no trade days, no trade weeks, and how to just wait. This is one of those weeks. Kind of practice that. Like I said, there's not much happening when it comes to economic data side. So essentially, all we're really doing is waiting for macro fundamentals to come out, macroeconomics, any progress with geopolitical side, and that's what's going to be moving the markets. And obviously the price is going to tell you where it's headed because it is going to react in some of these key areas, and that's when you start looking for some of those trade opportunities and pair it with that. But other than that, be comfortable with having no trade days or even no trade weeks. So there are going to be weeks where you're not trading. Even if you're someone who's growing a small account, be comfortable with having no trade weeks. It's all about really building the skill sets instead of focusing all on the monetary aspect. The money will follow if you have the proper skills. If you don't have the proper skills, you could have a $10,000 account or a $100,000 account. You're going to blow both of them just as quickly. But if you have the proper skills, the proper discipline, risk management, all that stuff, then you can grow your, whether it's a $500 account, a $1,000 account, $10,000 account, or a $100,000 account just as quickly. So focus on the skill sets more than, the monetary aspect and how many trades can you catch. Because in trading, the whole goal is to trade less but make more money. You don't want to be sitting there every single day of your life for the next 5, 10, 15 years trying to catch a trade 10 trades a day. Eventually you're going to get to the point where you're like, I want to go enjoy my life. I already made a lot of money in trading. So then you will only want to catch maybe 2, 3 trades a day or a week and just let them run and make money for you in the background while you go enjoy your time freedom that you've earned.
Great point. Yeah, if you guys need to sit on your hands or if you need to close MetaTrader and just keep TradingView open and just watch it, do that. Is anyone in here struggling with discipline? Where you'll do really well one week and then the next week you just lose all your profits. Then the next week you're doing really well. There's got to be somebody. Afraid to speak up. Listen, man, we've all been there. Not for overtrading reasons. That's okay. It could be many different reasons, Kat. Thankfully not. Good job, KB. Could it be over risking? Could it be just bad decisions in the market, or not necessarily bad decisions, but maybe just trades that are a little off with the decision making, where you could have secured, but you got a little greedy and let the whole thing run because you wanted to grab X amount of pips, and then all of a sudden you get stopped out or stopped to break even, and you're missing a lot of these moves. Okay. And Kat, do you have any of those specific trades that you want to run through real quick, and we'll see like how we can do better because that's how we get better like on the live stream when we have ranging markets like this. Just going over good examples of trades or bad examples of trades and seeing how we could have been better. So if you guys want to, and this is one of those things. Yeah, this is one of those things in one of those markets or industries where if you guys want to get better, you have to swallow ego. Like you have to check ego at the door and just know that like I need to get better and I need to be in a better place in this market or in this industry or with my career.
And the only way to do that is to be very real with yourself.
Yeah.
So I'm not saying sit there and be like, tell yourself, damn, I suck. But I'm saying that instead, look at,
Like
what are
getting
your
it.
weaknesses, what are things that you need to work on, and then from that point on, make a plan on how to fix those things. Sometimes it just means you gotta backtest more. Sometimes you gotta test out your setups more. Sometimes it means not having so many things on your chart, right? Maybe you have like trend lines, you have like patterns along with indicators, and you have like a ton of other stuff, and half of the time you're not even sure, how it correlates to your trading. So maybe it just means cleaning up your chart a little bit. Maybe only having, if you want to use like indicators just as supplemental stuff, right? It's not a substitution, it's just an add-on to your trading. Then maybe you have like your couple of indicators on there, right? And if you're not even sure how that works, then maybe you come back to the basics and you're like, I'm not going to have the indicators, I'm just going to work off of a basic strategy, right? To back test, and that's how you figure out what works for you, what doesn't work for you. Sometimes it means that, I'm doing my analysis and I've been doing it for so long. Sometimes it works, sometimes it doesn't work. I have no idea what's wrong. So then you reach out to somebody who can help you out, whether it's a friend, whether it's someone else that you look up to, whether it's like either one of us. So making a plan on how to fix those problems, because unless you do that, nothing's going to change.
This is what I like to see. We're getting the dialogue going. Everyone's kind of coming out with what they're struggling with or what's working for them, which is going to help other people too. That's how we get better as a team.
Mhm.
And sometimes I feel like I'm going to read this in a second, but sometimes I feel like I'm talking to myself when I talk about like sports analogies. But like think of these as like film sessions. And if you don't know what that is, like when I was in college playing football, we would go down to the basement where we have our film sessions and meeting rooms and stuff like that. And I would just go in there with the safeties coach and sit there for like 2 hours just watching film of the previous game that we just did, seeing what I could do better, how I could tackle better, how I can wrap up better, how I can knock a ball out, how I could pick a ball off, right? And that's all on defense. I was playing offense in high school, but like that, you want to get as good as you possibly can, and
100%.
you would get better every single game. I would feel more and more confident every single game. I'd be hitting harder every game.
You know what you
More,
gotta do? You have to share the Steph Curry video that you sent to me this morning?
yeah,
You gotta share that. Because he's a GOAT, right?
yeah.
He's one of the best players when it comes to NBA, in my opinion. And you gotta see the shots that this guy throws. Like, even when he's practicing, obviously, he doesn't throw like a half court shot every single game or anything like that. But the fact that he still practices for it, instead of just being like, well, I'm gonna wing it for my fans in that game. He
Yeah.
obviously practices. That's why he's able to perform that way.
Yeah, 100%. If you, show them if you do you put that on your story by any chance?
No, I can though.
Okay, if you want to, but
Yeah,
I
of
was just
course.
saying like this video is him like pregame warm ups.
Yeah, pregame.
Somebody from the crowd like shooting a video of him, and the rebounder is just giving him the ball, and he's going from the free throw line, draining it, going back to like between the 3 point line or free throw line and the 3 point line, drains it. 3 point line drains it. Deep three drains it. Half court drains it. Like and it's like he's doing it with his eyes closed, and that's just from practicing over and over and over again, playing since he's a little kid. And that's how you guys get better too from back testing, where
Hmm.
you guys can like. I was telling Chris the other day. Is Chris in here? Where's Chris at? Oh, Chris Davis. There he is. He was like the first on the stream the other day, And we were just like breaking down the charts. We were breaking down gold first because that's what he trades mainly, or that's the only thing he trades actually. But we were just breaking down gold, and I'm like, dude, you get to this point where you feel like you could break the charts down with your eyes closed, and obviously, like that's impossible. But like, you guys get to that point where you're that confident in where you think price is gonna go. Now, obviously, when you're ranging like this, you have no idea where price is going to go. And honestly, as a successful trader, you do not need to know where price is going to go to be a successful trader. You have to have like a probability in mind. You have to like know what's the best case scenario or what's the most probable thing that's about to happen on this pair. Now, when things are ranging like this, everything's 50-50. When you have a nice trending market, like we've had in the past, right over here, creating higher highs, higher lows, there's a 70 to 80% chance that price is going to come up and retest the highs. Like right over here, right? It's a little messy price action on the way up, but if we hold support at this previous resistance, we could get a couple of liquidity grabs, but we're coming right back up to retest the highs, right? Same thing on the way back down, correcting this move, right? If we break certain levels, there's an 80% chance that we're going to come down and retest the lows that we just created, like right here. Creates this low, come up, retest, come right back down and retest that low. Retest this previous support and resistance. So like you guys are gonna get to the point. Just keep making sure. Oh, we're coming down. It is 7:47. Where did the 15-minute candle close? 15 closed above that level.
Yep.
This current 15 came up, created a top wick, passed the low of that candle, and now we're coming down. So your question is, do you want to take this now as we pass the low, or do you want to wait for the close below, wait for the top wick rejection, and continue down? Or the classic retest?
So I'm going to give it the first 5-minute close here, see how this candle is moving, but I'm comfortable with this trade. Just to break this down real quick, again,
I would like this.
I saw there's volume in this, yeah, exactly, right there, that's perfect. So there's volume in this candle right here. Price is pushing down, closing right into the zone, right, breaking previous lows. Next one makes a top wick and continues pushing down. My stop loss is right around this area, and then as price continues pushing, then take some partials at that 20 pip mark, and then move my stop loss. I'm not going to go to break even just yet. I'm going to give price enough room to kind of test into these areas, but I'm going to take out majority of my trade.
Like it.
So my entry is at 161.956.
956. Right around here. Cool. And this is where your stop loss is?
A little bit tighter. Right there.
So we'll keep that on there for the visual for people. But yeah, as I was just saying, it's just, guys, keep back testing. And I know Kat was saying something in here where you're still struggling with execution a little bit. Are you feeling, and don't be afraid to talk on the mic, are you feeling any more confident with the back testing you've been doing the past week or two?
Yeah, I am. Like, I can at the very least see where I went wrong with the like lack of execution part. It was just my finger at this point that didn't pull the trigger. Like, I'm not trigger happy or whatever you call it. But like I can more easily identify if I did something wrong or right. So at least that's bringing me a little bit of ease, I guess you could say. And yeah, it's slowly making me feel like, all right, I just need to take it and look at it.
No, that's just trying to like draw the scale again.
Also, quick question: how come you guys are looking at the 5-minute? Is it because of the volume?
Just the way it looks right now. It's, at least for my sake, it looks.
I mean, it makes sense, but
15-minute and the 30-minute, right? Okay. We're not taking this based on the 5-minute. We're taking this based on the higher time, even the daily. You want to go back to the daily again. We're taking this based on the fact that we're rejecting the daily high up here, right? We finally reached it, right, in the middle of the week. We're rejecting this whole zone from 162 400 to 162 200. All the way in this area, we have all these wicks, candle bodies over here, these wicks over here. Now we're tapping into that area. I'm not in this, by the way. This is Sharma's trade. But what I'm saying is, I understand where she's coming from, because you have this rejection of this whole zone. We're starting to come down. You got this doji candle. This candle's coming down over here. Looking at the 30-minute, we get the strong 30-minute close. We get the top wick formed on the 30-minute and the pass of the low of that 30-minute right over there. 15-minute, you get this candle closing below this area right here. You get the small retest, liquidity grab with that candle. Flips bearish, closes a fairly strong 15-minute candle over here. This 15-minute candle creates a solid wick past the low of that candle. Now, if you go to the 5-minute, all time frames correlate. That liquidity grab on the 15-minute was a fake out right here on the 5, where we close below, consolidate a little bit, we break above, and then we close a strong bearish 5-minute candle with the bottom wick to form. What did I just do? There we go. Just use the eraser because I want to break that chart down on the top up there. So now you get a strong 5-minute candle closing like this, top wick formed over here, and then a pass to the low of that candle over here. Now, if we're going to keep doing that. We're going to take this. I want to see candles closing below this level, if anything. If I'm going to take that, I think, like I said, safer sells are going to be below this area, because then we're starting to break structure. And then especially if we start breaking this area, then we're definitely breaking structure, and we could take some moves down over here. So these are high risk, high reward sells. These are still high risk, high reward sells, but a little bit safer. And then these are safe sells. Right back into this area. That makes sense, guys?
Yes.
So now what I wanted to do is break down this right over here, what you were saying, like, what were you saying? You were saying something about like greed and stuff, right? Well, you were saying, okay, so what I was analyzing, and what we've like always talked about, you and I, is like there's two different types of traders, especially when you first come into the market. There's the more fearful ones, right? The ones that are afraid to execute, they don't want to be wrong, they're more perfectionist, stuff like that. And they're really holding back on trades, and they're afraid to execute on their plan, right? They don't commit to the trades. And even the perfect setups that they get, they're really risking a very low amount, or they're not taking it at all. The greedy traders, right, the ones that fall for greed a little bit more, are the over traders, over riskers. They're not afraid of losing money. They're really like reckless in their trading. Where they'll go up 10% in a day, and then all of a sudden they'll lose all that plus like another 10%. So now they're down 10%. Right, and they're all over the place with that. You want to be really in the middle of this, right? Mm-hmm. Either one is not good to be too much on that one side, right? It's the same thing with anything in life. You really want a good balance, right? So you want to be, not the perfectionist where like everything needs to be right and all that stuff, but at the same time, you do want to be, like very selective of your trades, as far as like which trades you take and which ones you don't. Which ones you stay out of, which ones you commit to. And also when it comes to your setups that you always look at, and you've seen backtesting over and over and over again, you have in your trading journal that you've won over and over and over again, those are the ones you need to commit to. Mm-hmm. Right? Whatever Akio used to say, he always says like, you got to commit to greatness when you're taking these trades. So like, I couldn't agree more. Like this is, like when you have your setups in your trading plan, you do not hesitate. One of the first things on my trading plan, I don't really look at this as much as I used to, because as you get older, or not older, but more experienced in the market, you really don't have to do a lot of these things as much. Everything is like ingrained in your brain, and you can predict. Back to what I was saying before, breaking down charts, you get to a point where you can predict where price is going to go almost every single time. Right? So like it's the same thing with like you get to this point where you don't need to spend as much time back testing. You don't need to journal as much as you used to. And I don't want you guys to, feel that. And I always like to lead by example. But like when you get more experience, there's a lot of these things that you don't need to do nearly as much. But in the beginning, you need to.
Yeah.
So let's go back to the. Does that make sense?
Yeah. 1,000%.
So I want you to be able to commit to your trading plan and be able to understand what setups you're looking for, what your main bias is in the market. Go from there, and that's it.
Mm-hmm. Yeah, I think I'm definitely getting a little bit better with it. So definitely that back
really
testing.
gonna help.
Mm-hmm.
And like I said in the beginning, when we were talking about back testing, it's not just going to happen overnight. Like it's slowly going to start to turn. Like you're slowly going to start to get more and more comfortable, more and more confident in your system, in your edge, and it's going to take a few weeks. It'll take a month or two, but you're going to slowly start to feel that more. Your confidence. If you have like a meter of confidence, it's just like slowly ticking up. It's not just going to catapult all the way up. And if it does, you don't want that because then you're going to start over risking and over trading.
Mm-hmm.
You want that slow build.
Yeah, I'm also trying to work on on SharmaFX when I get to the trading session to slow it down a bit. Because sometimes my back testing sessions go a little too well, and it's because I'm able to see data happen a little quicker. So I need to make it more realistic so it's actually a real approach.
That is such an underrated thing that most people look past, where they're on the simulator and they speed it up really quickly, and they're on like times. If you're on real time, they speed it up. Here, let me actually bring it up here. Oh, it's
Real
right here.
quick, as you're pulling it up, I'm out of the trade, but I'm going to look for another opportunity, my last opportunity, but after the market opens up.
Okay, sounds good. So maybe we'll get like a double tap of this area over here and continue down. Did you cut your losses short? Is there anywhere you want me to mark this off?
Yeah, I got out as soon as this 5-minute broke the previous 5-minute high.
Right here. Okay.
Yeah. So I got out before I even hit the stop loss. I got out at that point, and then a little bit lower.
No, I was gonna say like your stop loss was here, and you cut it.
My stop loss was at 0.79, so 152.79.
7.
Yeah, like around that area. And then as soon as price started breaking the previous 5-minute high, like here, I was giving it enough room that, okay, retest this area, continue pushing down. And then once it broke above that, I just took out before I even hit my stop loss. Because
You only lost like 30 or 40% of what you were going to.
yeah, just a very small amount of it. But using mostly just like price action. You break the previous 5-minute high, this is a support that I'm looking at. And then once price breaks above that and comes back into these areas, right, then we're no longer continuing down, or at least we don't have the volume yet. So either way, I'm going to be looking for another opportunity, but again, after the market opens up. So I'm not looking for it right now.
It's going to open up in 2 minutes.
Mm-hmm.
So yeah, just wanted to point this out real quick. A lot of people, you see where it says real time right here? And then you get ticks per second. They're basically the same thing. I honestly don't even know the real difference. But a lot of people use the simulator at like times 55 or times 15. Now, when you have a consolidating market and you're trying to get like some quantity trades out where you're getting multiple sessions in one backtesting session and price is consolidating, you could speed it up to do that. But when you start to see that price is starting to approach a setup that you like, or things are setting up, go right back down to real time, right? And just sit there and watch it. That's going to help you with your emotions because now you're not so attached. You're not like, when you're in the real market, you're so used to everything going so quickly that now, like when price starts going in profit, you want to get those 10 pips right away. Or you want to get the 15, 20 pips right away. You just want to see price skyrocket or drop really quickly because you're so used to that on the simulator.
Yeah.
But on the simulator, if you go down to real time and you could just sit there and watch price slowly reach your 10 pips or slowly start to go into drawdown and you need to cut losses, right? Then you're going to be a lot more prepared in the live market. You want to treat this as a real account as much as you possibly can. Like this is a real account to you.
Yeah.
This is your hard-earned money, and I know it's hard to equate that with that, but like over time, if you just tell yourself, this is my hard-earned money, and I'm not going to just treat this because it's a simulator. I'm going to hold my trade longer, or I'm going to, I'm not going to cut my losses short, or I'm going to rewind, reverse the candles, and then try to catch the correct trade. That's not going to do you any good. You're just cheating yourself.
Mm-hmm. Yeah.
So that all clear everything up for you?
Mm-hmm. Thank you.
So that is that one. You ended up getting a hard rejection on the 1 hour over here, but it did close bearish. See the 4 hour? I mean, we're still in this bullish pattern. That's why I was saying like safer sells would be below this area or below this area. But again, I can see based on the daily, you're going to get profit taking in this area here. And that's what Sharma understands. But
So there's two things, again, as I'm looking for another opportunity. The only way that I take another opportunity is I wait for the first 15-minute candle close here, which again needs to close below that 152 area now, right? It needs to close below it, and then as the next candle continues, then I analyze that topic rejection, continuation down, or are we struggling to continue down? The second thing is, let's say the 15-minute candle closes below 152, but the following one takes us right back into this consolidation. So that means that we don't have the volume at the market open right now, and as more economic data is coming out, which we're pretty much just waiting for the FOMC meeting minutes now, then the chances are that I come back, and that would be my second attempt. So I'm not taking two attempts right now and then trying again with the FOMC meeting minutes. Instead, I'm just going to wait for that high impact folder to come out. We have seen price move according to whatever it says in that FOMC meeting minutes. So I'd rather just save my second attempt for that. And the first attempt, I came in with like 1.5%. So I still have 1.5% remaining for today. So that's what I'm going to be coming in with my second attempt.
cool. I want to get into some of the chat because we have like 20 messages here. So the last thing we left off with was Peter saying like, "Damn, I suck." He's laughing at that. KB, I found that improving risk management in terms of securing profits and sticking to the trading plan helped me big time to grow my equity. Like VJ said, there's been weeks or even whole month that you don't even trade. It's great, man. It's hard to do. It's a lot easier said than done when you're not taking a trade for an entire week, especially when you're showing up to live streams and people are taking trades, people are calling out trades, and you're just not comfortable with it. That is a big step as a trader to be able to be independent and still be on these live streams. Like it's not like you're completely leaving the live stream and like I can't handle being on the live stream with other people because that's gonna sway my emotions. That should tell you that I should be on a live stream and I should practice that where other people are trying to sway my emotions, and now I'm strengthening my decision making by not following the crowd. Right? I'm getting good analysis from people that I trust and people that I like as traders, and we're sharing ideas and stuff like that, but I don't have to take every single trade that they're taking. Right? And being able to practice that and build that muscle is super important. But again, even if you're on your own, very hard to be sitting in the market, waking up early every single morning to trade and to make money and to not be taking anything because you don't like it. That's huge, and that's a big win. Right? There's multiple wins other than making money in this market. It's one, securing risk before losing your full risk. Right? It's not taking a trade when price is consolidating. Not taking a trade when you don't like the trade that other people are taking. Like those are all wins there. But I mean, a win to me really is like obviously making money and making profits. But the second win to me is when like you're in a losing trade and you have a plan, an exit plan for that trade, and you're able to get out of it way before you're going to lose your full risk. I can't tell you the last time. It's been maybe 2 years since I've ever let my full stop loss be taken out. Right, and even then it was like just not news, but like something happened where just like prices took me out. It was on gold, right? So like that's where you guys want to be. Let's say cat, while at the same time trying to do it in a healthy way where I'm not over trading, etc. I know I need to keep backtesting and getting used to playing the trigger because my analysis plays out. Absolutely. And that's where you do it. That's your arena to like get better. Right? That's your film session. That's like your practice to be a better trader is soft FX. It's the best thing to do, especially on real time. Like, are you doing something when it's you're speeding things up and it's a quick backtesting session? Sure, because you're seeing if you're right and you're gaining confidence that way. But your emotions are not going to be as built up for the live market as they could be, where you'd be doing it on a uh, slower session. With the execution side, cat maybe even only risk 1% to 0.5%. Yep, 100%. If you're not comfortable, if you're not 100%, like you want to take trades that you're 90% sure are going to play out, and you guys know fully well. You guys have all had trades like that, or setups like that, where you're like, there's 90% chance that this is going to play out. Those are the trades that you want to take, right? But like if you're still a little iffy and not 100% confident, just lower your risk. That's a great point. Like I know I also just need to backtest more. I'm about 3 hours this week, so far gonna keep going. Yeah, there you go. Just keep it. Just keep aiming for seven hours a week, 1 hour a day. Right? That's not too much. If you guys have really busy schedules, at least get like 30 minutes in.
And another key thing is that you should also be journaling your backtesting sessions too. The trades that you're taking, the setups, even if it's the same setup over and over again, look at the different market conditions, look at the multiple time frame analysis, how are different time frames setting up and all of that.
Yep. Yeah, where's let me see. I didn't have it anymore. I had a SoftFX journal over here. I had to delete journals or I'd have to pay for Trello, which I didn't feel like doing.
TradingView backtesting?
Yeah, no, not TradingView. It was SoftFX. Yeah, I think I may have deleted it. Or I think there's like, it's weird. There's like multiple accounts that people have, like workspaces. Here it is. Let me see. There's another one. Here we go. Yeah, I don't know the difference between workspaces. Yeah, this is all SoftFX over here.
One thing that I really like from you that I also started incorporating in mine was taking screenshots of different setups. So Stefanos legit has one row where he has all these setups, and he either like he drew them out or like it was charts or whatever, but he took a picture of an impulse trade, what are my conditions for it, break and retest, what are my conditions for it, and how the candles are supposed to look, and if it looks a certain way, then how am I going to take this trade opportunity. Like that's something that I also started incorporating, which I thought was very, very useful, especially if you're a new trader and you're testing out new setups. So if you're someone who has been using break and retest and now you're like, well, I want to be able to catch some impulsive trades, then how do you do that? Like a breakout, fake out trade, anything like that.
Yeah, this is
Yeah, there you go. Setups.
It was actually just like an example I did for Tiger once on a private Zoom we did, where I was saying like set up a column like this or a list like this on Trello where you have all your setups. So classic break and retest. You have fake outs here, impulse volume push. These are just like random names I'm just making up. Like I know, is Paul in here? Paul has these crazy like names for all his oh, we got Tiger in here now. What's up, Tiger? Paul has all these like crazy setup names, like I think he got from Halo or something. But like these are all like resistance, impulse, volume, sell. Like I'm just making up names here, but like these are all different examples of where you would see something like this, where you could possibly take some of these entries. And these are really risky entries here. Like I wouldn't be doing this, but like this is just, it was just an example I was showing the Tiger where if you just have a whole thing like this of all your setups, and maybe you're only looking at two setups right now, look for all the examples you could possibly find on your pair for these setups and just put them all inside this card. And this is just one of them I was just making for him on that Zoom. But fake out. You got two different examples on gold and GJ of what this fake out would look like. So now when you're about to hop onto the computer and about to like fully engage into a session at like 6:30 a.m. Eastern Standard Time, go through this real quick and see exactly what you're looking for. Right? Look for all the setups that you want to see and train your eyes before the session. And tell yourself, these are the only setups I'm taking. That's it. I have here, impulse volume push. This is a setup I really like. And I have multiple examples of this. Where you get these bearish candles closing, weak bullish candle, top wick formed on this candle, we pass the low. Right over here, I love this. We close below this previous area right over here, get the retest with a weak bullish candle, top wick formed on that candle, and then we pass the low of that candle right there. And we secure somewhere around this area where we have this support. This is another one. Strong bearish candle with a wick to fill, weak bullish candle, retest of that area, top wick formed, we pass the low, and you get a nice volume push right over here. And then this one would have been the continuation of that move. But yeah, back to this. Like this is all. Let's see. This is SharmaFX over here, and it's screenshots of every single, where the entry was. This is trading in a range. I don't know why I was doing that, but all the screenshots you want of all the time frames: 4 hour, 1 hour, 30-minute, and 15-minute. Ended up playing out. But you have all the details over here of what exactly I was doing and where I secured and all that stuff. But I think there's an even better journal for SharmaFX here. Here we go. No, it was that one. So this is an early one. This is the way I used to set my things up. Like currently in, what current trades I'm in, good wins, swing trades, bad wins where it's like I'm not abiding by my rules, but I won the trade anyway. Good loss where I abided by my rules, but I lost the trade, and then a bad loss, just like not abiding by my rules and just going. And this is a long time ago. I don't know when I started this one, but yeah, journal.
It's the best thing that you can do for yourself. Back testing and journaling.
And listen, I get it. It's annoying. It's tedious. It's something that you feel like you don't need to do, right? What are some of the other emotions that go through with journaling? You're busy. You don't have time to do it.
I think after some time, you get to find your own strategy, even with journaling too. The reason why I say that is because, my trading career started with journaling. Mine started backwards, right? Like starting with stocks, like in high school, where you couldn't open a live account initially. So legit, like that Excel sheet, that's what I had. That was what my journal was. And that's also what my entire, trading history was. And then when I was able to, so that's really what forced me to hone down on the skills, like monetary aspect. I could put down like whatever money I want to put down, but it was more about, am I getting the analysis right? And then, what are the exit levels? Those kind of things. Instead of just putting down random numbers, like I started taking it seriously that way, because that was the only way that, I could start learning. I didn't have classes in my high school about the stock market. And so because of that, when I finally got to the minimum age to open up an account, I did that, but I had some experience when it comes down to like journaling and all of that. When it comes to analysis, whether you want to call it like demo trading or paper trading or whatever, like I went through that. And then because my school didn't have any of that, and I didn't have anyone to kind of show me about investing because no one in my family did it, that's when I started like taking classes to learn about it and just the self-education aspect of it. And then I started like the live trading and putting money and actually starting off that way. Obviously in high school, when you're like a junior or senior, you don't have thousands of dollars to put down. You have a small amount, and that's kind of what you play with and start to grow your account. So over the years, kind of found a strategy for myself on how to journal and how to backtest and the important things that I wanted in my journals as well. So I think over time, you kind of develop a strategy for that too. You develop a strategy for everything. You make everything work for you.
And also over time, like I don't know if you were touching on this, if I heard it correctly, but over time, like you get that strategy in your head. Your edge is like basically engraved in your head, and maybe you don't have to backtest as much. You don't have to journal as much. And I hate like saying that. I'm just trying to be real with you because I hate saying it because it's like setting a bad precedent and a bad example. But it's just like this is what I heard from my mentor starting out. And in my mind, I was like, what do you mean? Like I've said this many times to you guys, but like I was like, what do you mean? I'm gonna backtest every single day. I wanna, I wanna get better. I wanna do all this stuff. But you get to a certain point, and I just want you guys to understand that there's a point to look forward to where you're going to get a lot more confident in your system, and everything is basically engraved in your mind. Now if you take a break, if you go on like a vacation and stuff like that, yes, you get a little rusty and you need to come back to your journal, which you have hundreds of backtesting trades, hundreds of real trades, or hundreds of missed trades that you've taken that you can go back and look at real quick. I have that library now, right? I've journaled just about every single trade I would take.
100%. It's like any other skill, even with like let's say technical analysis, right? So when you start off, it's going to take you, let's say 15, 20 minutes, 30 minutes maybe, to do your entire multiple time frame analysis. You're going to be second guessing yourself at certain levels. Do I really mark off this level or not? Is this significant? But then over time, it's one of those skills where it's like instead of taking you 15 to 20 minutes, it takes you probably 5 to 10 minutes. And then you look at certain levels, you're like, it doesn't really matter, right? Maybe in the beginning, if the 1 hour is consolidating, you still drop down to the 30-minute, the 15-minute, and you still do your analysis down there, marking off levels. But then over time, you realize that if, well, the 1 hour is consolidating, it's not like the 30 minutes going to be any cleaner, right? If anything, the more you drop down on these lower time frames, the harder it starts to get because there's more price action. You see more candles forming, you see more levels. So then you kind of make it a rule that, well, if 1 hour is consolidating, there's no reason for me to drop down to the 30-minute, right? When I started off, same thing, and I'm pretty sure Steph knows you as well, it probably took you a long time to journal or even a long time to do your analysis. But now when I hop onto the charts, if it's just me, unless I'm making a video to like explain something and break down something to you guys, then it might take me like 10 to 13 minutes. But if it's just me doing the analysis, it doesn't take me anything more than 5 to 7 minutes to do the entire top-down analysis on two pairs. And even doing the fundamental analysis. And what are the things that I'm looking for? It's just one of those skills. You get better as you practice.
Yeah, 100%. You get quicker with it. And also, like, you'll get into a transition of, like, when you're journaling, and not a lot of people are this detailed. I know, like, in my group, like, Miles is really detailed with his journal. Kat has been really detailed with your journal. There's a bunch of very detailed people with their journal. Like, I've always been very detailed, especially with this description. But as time goes on and you get more and more skilled, instead of not journaling, you're still journaling, but you're journaling more so taking all the screenshots of all the higher time frames, all the way down to your entry time frame. Every single thing that you've done, you're taking another screenshot, and then all the after screenshots of your higher time frames as well. So you're taking all those screenshots, and then you're jotting down a couple things in here, right? And I know, Tiger, I believe you're still in here. You asked a question about analyzing your previous trades. What I like to do, and what you can do in your daily must that we do in our group, you should put in there to review 5 previous trades that you've taken. Now, if you have a big database of trades, that'll be easy to do. But if you don't have that, build that database, build that journal, build the library of trades that you've taken in the past so that you could go back and study them. And what I like to do is I created this tab. I made it pink because like it was like the last color I had available. But not that it matters. But later analysis I have as a tab here. And what I'll do, and I talk about this all the time too, is like I can go back to like 3 or 4 weeks ago, even now as a trader, and still see things that I could have improved on in that one trade, and write a little later analysis here, like a little note to myself of what I should have done differently, right? And like this one, like I was saying, let's actually take a look at this trade really quickly. This was the daily setup on GJ. Looks like we're rejecting this level over here, struggling to close above. We have this current doji candle over here, and we're retesting these previous candles. What price were we at? We were at like 145 at 140.5 around this area, 140.6 it looks like. That's the daily. This is the 4 hour, right? We're holding support. We create this high. We come right back down to the support, and we're holding it, bouncing off this level, kind of like what we did over here. It looks like that's what I was anticipating.
Mm-hmm.
Support respected over here, strong bullish candle over here, and it looks like this is the 1 hour, so maybe I took this based on the 30-minute. Support is being respected up. All right, 30-minute. Get the strong bullish candle close in this area, right? Only thing is we were in a downtrend bouncing off this area. Entry after strong bullish close, anticipating 5:30 a.m. volume, stop loss below previous 30-minute candle. So we took this after this candle either closed or, for me, I would have taken this as it flipped or as it passed the high of that candle right there, if I'm going to take it again. I secured 80% at 10 pips, stop loss at break even, and then take profit was hit, it looks like. Stop loss hit at break even. Or, yeah, I guess I was stopped at break even. But this, it looks like this is where I would have closed the full thing because we're now in the downtrend. This is an after screenshot. This is a later analysis. So now I see, and maybe I went back like a month later and I just drew this trend line. Looks like we're bouncing off this area. I caught the short-lived buys back up to this resistance, the whole resistance, tap into this area and continue down. As soon as this candle closed the way it did, I could have stayed in, but then this candle created a top wick, past the low of that candle, I could have closed the full thing instead of getting stopped at break even, right? And then what you do is you right here, later analysis. First of all, we were in a downtrend for the session, maybe wait for resistance to form, and then I could have taken that move on the way down, right? But to manage this trade better, close the full thing when price rejected with a bullish 15-minute evening star, which was that doji candle, back at previous resistance, and then price past this candle. So that's what you could do. Just go back, be very critical of the trades that you were taking in the past, and see what you could have done differently.
100%. Mine's quite similar, but I put the entire description of my trade first, like what's my multiple time frame confluence. And then I talk about the session. So there are certain trades that I have journaled, and I have put down that this setup is only going to work in Asian session or in New York session, right? And then how do I know that that setup is coming, and how do I take that trade? Like, what do I need to see on the daily, the 4 hour, the 1 hour? And then I have my entry analysis. And then I have my trade updates. How would I manage my risk? Let's say this was just a scalp opportunity that I took, but there was potential for it to turn into a swing trade. So then I write about that. So then how do I take that scalp into swing, and then post charts about that too. So there's different ways that you guys can go about it, but the point being is that at any given point, you want to be able to come back to your charts, to these journals, to these cards, and understand, what setups are you looking for in what session, and how are they going to play out. So you want to have as much detail as possible. Another thing that I've started doing is putting in articles too. So the articles I show you guys on Bloomberg or on Forex Factory, I will just copy the link and I'll put that into my card. So then later on, I can come back and I can just review whatever description that I've written in the card along with the article, and that'll give me the entire picture that I'm looking for from a fundamental side along with the technical analysis side. And then always put down some of the key takeaways from that week. So you could do key takeaways every day. It might become a little too much at times, so then you just do key takeaways every single week. And what are some things that you messed up on? What are some things that worked well? And what do you need to fix the following week?
It's a great point. All of those, especially the fundamental, putting that in the in there.
Mm-hmm.
And one thing, like I was also just talking about too, is like me with my journaling now, what I like to do is I like to put a little bit more detail on the chart as far as like in these bubbles, what I'm thinking and stuff like that. Instead of like feeling like I'm doubling what I'm writing on the chart or what I'm doing on the chart, where I could just like scroll through a lot of these and know exactly what I was doing, right? And if you put a little bit more detail in the bubbles, you could get a good sense of like what you were thinking during this trade. So instead of like writing all this out, a lot of what I write in here is now psychology. And it's just like a quick paragraph of like what was going on fundamentally, what I was thinking of right before the trade, what I thought about like, you know, during the trade, after the trade, all that stuff. And then, you know, maybe after the trade, a quick like jot down of what I should have done. But that's more so in my my trading AAR that I write in my notebook. And I'm like keeping track of my psychology, also like the volume pushes, stuff like that. Just a quick couple sentences in my trading AAR, it's going to help me moving forward as a trader. Because even though I'm not journaling as much or backtesting as much, I'm still keeping notes as far as like what I should be doing better and constantly improving. Because I've never arrived. Like nobody's ever, you're never going to arrive exactly where you want to be. You guys should always feel like there's more to improve. There's more challenges that I need to meet and pass before, you know, I become like whatever you guys want to become. If you guys want to become one of the best in the world, these are the things you got to do.
100%. But one thing is that it also depends on the person. For myself, I like to downplay a lot of things. So then, you know, you set goals for yourself and you're like, all right, cool, like I did that, no big deal. And then you move on, right? But if it's something that you've been working towards for years, like for example, for me, like when I started trading, I never looked at it as if like, this is what I want to do full time. Like this is what's gonna take me to that like financial freedom that we tend to like hear about or whatever. Like matter of fact, when I was, you know, like 14, 15, like financial freedom wasn't even something I was even thinking about, right? But it was more of like just being intrigued by the markets and being a part of it, and how do I, you know, be a part of it, that kind of a thing. So when you do achieve like those small things, like let's say you started off trading and it's been like, you know, 3-4 years and you have no idea what's happening in the markets, you've never been profitable. The first time that you are profitable, you're able to end off that month being profitable. You know, just celebrate that quick win, but then set up bigger goals. Okay, now I have done all this stuff. I've like, you know, been profitable. I've set up like proper risk management strategies. I know my pair, whatever it is, right? You've done all of that. And then now you have something to look back on and be like, okay, this is what worked, this is what didn't work, and this is how I set better goals. And then just move forward from there. But, you know, make sure that you're taking the time to realize that you are making progress, even if it's not as big as you would think initially. But that's what makes you keep things realistic too, right? You can't just come in your first year of trading and expecting to make like $100,000, right? You have to first hone down on those skills. And what's the progress that you've made? Maybe you understand technicals better. Maybe you understand fundamentals better. Maybe you're able to mark up the charts better, things like that. And then still look at your progress in that sense, instead of just looking at it from a monetary perspective.
That's the most important. Like being that internally motivated person that like just wants to keep getting better at their skill and being recognized for that, if that's important to you. But like just always wanting to be better, right? Because once you guys start making money, it's gonna be over for you, right? You're no longer gonna want to grow. You're just gonna start going backwards, because if you're staying stagnant, you're going backwards. That's not where you guys want to be. You want to be internally motivated, wanting to be one of the best you possibly can be at your craft and being known for that too,
Mm-hmm.
throughout your family, friends, people that you know online, stuff like that. When people think of your name, they think of you as like a very good trader, right? And it's not so much the approval from them, it's just more so like you know exactly where you stand as far as like your skill set and what you bring to the table in this world.
Yeah. And it could be
And
different styles of trading too. Like maybe you're really good at swing trading. Like that's how I was about 3 years ago, right?
mm-hmm.
Swing trading is something that I used to do because that is what used to work with my schedule. And then it was like, all right, well, I can swing trade, but how about I catch these trades on lower time frames? So then it became like, scalp to swings. So that's how that started. So that was my way of trying to improve. But let's go ahead and move on to what to expect for the rest of the session. Yeah.
Yep, a whole bunch of nothing.
All right, so let's hop up to the daily here real quick for gold if you could.
Oh, you want? Okay.
Yeah. All right, so here on the daily time frame, there you go. So we're still in a lot of consolidation. When we start to narrow in into the price action on some of the lower time frames, we see that price is trying to break above these areas, right? So down here, we've seen that price taps into these areas here multiple times, and then once it does push up, there tends to be some volume. So if you're going to look for any sort of buy opportunity, make sure that you're waiting for price to break above this area and then continuing back up. Same thing here. Price has been consolidating in this resistance area as well, and then it bounces back. So understand that this is the limitation of your trade, and then there could be some pullbacks into this area. You have the Fed meetings coming out in a couple of hours, and so that's what essentially the market's going to be setting up for now, because the New York market is open. We're not seeing any other economic data coming out that's going to be moving the markets, and we're not seeing a lot of volume either. So then when you drop down to the 4 hour real quick here, so on the 4 hour time frame, we're starting to see this area here being held as support. This 4 hour candle is going to close in about 30 minutes. So you want to see how this candle is closing. If we come back and close below this area, expect the consolidation until the news comes out. But if you're able to close above it, drop down to some of the lower time frames and then look for your break and retest to continue pushing up. So even here, holding on to the support, real quick, you're holding on to the support right here, and then price is making that bottom wick, pushing up. I would say just wait for the first 15 minutes of this new candle and then break and retest to the upside.
Yep. For me personally, I'm just gonna stay out of
Yeah.
this. This is one of those ranges where it's like, it's just not worth it for me at least. Yeah, let's go over to TJ.
So here on daily as well.
Yep.
Alright, so on daily time frame, what we have is, I have my zone a little bit lower. I have my zone right here. So, yeah, there you go. Perfect. So I have my zone right there. Oh, not there. Right here.
Oh.
Yeah, so that's that 152 300 area. So here the thought process is, if price continues breaking above this, right here, I need to see a break and retest of this zone in order for me to take a trade to come and fill up this wick. And then if there's going to be any sort of runners, then that's when we can start to consider that. But right now we see price is rejecting that, making those top wicks. So then we drop down to the 4 hour time frame. So on the 4 hour time frame, we're starting to see this bearish candle. So what I want to see here is price breaking below this bottom wick that this 4 hour candle just made. So that's the little line that we had made initially when we took the first entry. So I want to see this candle closing bearish here if I'm to look for any sell opportunities in the next 25 minutes. And then the next candle pushing down after creating some sort of a top wick, breaking the lows and then continuing down. So that way now I have a bigger range. Instead of just 20 pips, I have a bigger range to come down to 161 400 area and tap into that. And then you can evaluate whether price is going to continue, if it has the volume to continue pushing down. And then you start to target some of these areas down here.
Perfect. Yeah, that's what I was really looking for. And possibly maybe, some of these ranges are big enough where if we do break below like this area over here on the lower time frames, you could possibly get that break and retest. You can expect a retest of 161 450.
Mm-hmm.
And then, save ourselves, it can be below this area. Like somewhere then we're really getting a break of market structure because then we're below this area because we keep rejecting this area right now. If we close below that area, if you want to take something in there, maybe. But these are going to be a safer area. Maybe even like right here. You have about 20 pips right in this area that you could grab a sell in with cleaner moves over here. But you have this wick, this support right over here that maybe you want price to close below to take something like that. What do you mean by paranormal? Like into ghost stories and stuff? Who's who said paranormal? Was that you, Sharma?
No, I think that's they're having a private chat or something.
Oh, all right. Um, and then yeah, that's basically what we're looking for on GJ right over here.
Awesome.
And
So
now
again, Stefanos, you haven't taken an entry yet, right?
I have stayed out.
Okay. I took one. That was a 1.5% risk, so I still have 1.5% available for today. And so that's what I'm going to be looking for, but only when the Fed meetings come out. So I'm not looking for a trade in the next couple of hours, only when the Fed meetings come out and there's volume in the market. But these rules still apply. If price is not breaking these levels, then I'm not looking for a trade opportunity. So this week, again, is very light on economic data. So any move that you guys see is going to be a technical setup, but there's a very high chance that price could just end up consolidating this week as well, as we're getting set up for next week, next couple of weeks actually, as more fundamentals come out. So if price is consolidating on higher time frames, like the daily time frame, for example, on gold, then understand that it is only setting up for a bigger move in the coming weeks. So if anything, prepare for that. But other than that, if you guys have any questions, then always feel free to reach out to me or Stefanos. The fastest way to get a response is going to be on Instagram at SharmaFX or at StefanosFX28.
And guys, if you guys got anything out of this, please like spread the word. That's all we ask. That's like the only fee of the stream is just like spread the word, let people know that we're just bringing value, talking about psychology, talking calling trades, all that stuff. We've called a bunch of really good ones the past couple of weeks. So that's all we ask. But guys, get the most out of yourself this week. Stay disciplined. These are the weeks that really test you, and you guys gotta. I know like you're not getting much action this week, but it's almost like a week to look forward to because now like you get to test that muscle of patience and get more and more discipline in weeks like this. All right, so with that being said, guys, have a great rest of the week, and I will see you guys. Actually, you know what? I'm not going to be here next week. I'm actually getting married on Sunday, but and then we have the honeymoon. So in 2 weeks after that, I'll be back with you guys on Wednesday, Monday breakdowns, all that stuff.
Congratulations.
Thank you so much. It's not what I was looking for, but